Hello there. I just thought I'd record a quick video. Really, don't do them that often, so I thought I would. Essentially, scary market, pretty scary market. But yesterday we have, some strength has come back, and we've actually printed the inside candlestick pattern. So if you read my candlestick books, I may have referred to it as a harami as well. That's like the Japanese candlestick name for this type of pattern. Um, Very simple rule, really. The low is greater than the previous day's low, and the high is lower than the previous day's high. So the range of price action is within or inside the range of the previous day's price action. What's that telling us? Well, it's telling us that after this massive fear, if we have a look here, we've got the VIX rate of change rank. So what this does is it ranks the 10-day rate of change of the volatility index, and it compares it to all 10-day rate of changes during the prior year. And what we see is we're in the top 99th percentile of 10-day rate of changes. So essentially, this is the most fear there has been in the market for at least a year. If we change the look back, we can go back even further. If we go back like 1,000 days, or we can see even over the last 1,000 days, so that's basically 4 years, we're also in the top 99th percentile. So there hasn't been this much fear in the market for the past 4 years. Now, classic quote from possibly one of the world's greatest ever investors, Warren Buffett: you want to be greedy when others are fearful, and you want to be fearful when others are greedy. Well, what does the VIX index tell us? It's commonly known, in fact, as the fear index. And with the VIX rate of change rank up here in the 99th percentile, this is massive fear. So what do we want to do? Well, perhaps we want to be greedy. Having said that, I would not want to be blindly placing a market on open order to buy this market. And this is what's neat about the inside bar. It gives us a very definable entry point, which is the high of the inside bar. And it gives us a very definable stop loss. And this is the kind of trade where really it would be an intraday. So I'd be looking to close this trade regardless of what happens at the close this evening. So if we get executed above the high of the inside bar, I'll be looking to just close the trade out for a quick kind of intraday gain. Other kind of confirming indicators, if we look at the RSI rank, again, we're in the bottom 2 percentile over the past year, and that's using a 5-period RSI. So again, what that's telling us is all the 5-period RSIs during the past year, of all of them, we currently have an RSI reading which is so low it's in the bottom 2% of all RSI 5 readings going back the past year. And if we actually go back and look at the charts, how this indicator has performed, you can see it's pretty neat at picking close to the market bottoms when it gets down to this low. So we can get some very short-term rallies. Again, though, as I said, you don't want to just place a market on open order, although looking at the pre-market futures, we can see that the SPY is actually firmer this morning. We may even open higher than the high of yesterday's bar if we were trading the SPY. But that's fine. If we open higher, I will wait for a retest of the high. If it doesn't retest, it just goes up from there, so be it. But hopefully we can just come down, test the high, and then we'll see a nice little push towards the end of close, today, which is Friday. And after this kind of sell-off, it looks like a, capitulation to me. I mean, that is one steep move down. Incredible, really. Now, longer term, I am actually expecting further downside. Although, I wouldn't trust what I say. But I do have, some quantitative systems, which, because if you look at the charts, we have a trend filter. So the bars are green, and they've recently gone red. Now, what that says to me is the next rally will present some short-term opportunities to short the market. But perhaps I'll get to those if and when they occur. But I don't want to be buying this market and blindly forgetting about positions. I'm not so confident anymore that this market is going to keep rallying to new highs. I'm more looking for setups on the short side now on any rally. Of course, the nice thing about that type of plan, if you were, is if you imagine we do rally up to kind of 190 or 195, our risk is defined because if the market does make new highs, yeah, we're going to have some losing trades, but really that's not a problem because if the market does roll over and continue lower, we have a long ways to go if actually we do begin to start making more of a lower low, lower high type pattern on the chart. But again, I will only be taking quantitative signals, and my opinion is just my opinion. I've absolutely no idea what's going to happen in the future. I don't profess to ever know what's going to happen in the future. All I do have is rules which tell me because the charts have turned red here, the first rally presents a shortable opportunity. And that's it for this video. So as I say, possibly nice little short-term trade today to the upside if we can just get a fill at 187.58 basically. So good luck with that, and I'll see you next week. Take care.